Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Market sell-off continues. Stocks and bonds actually as well continued their sell-off that began in August this past week, taking out their early October lows after a brief recovery effort earlier this month. Now, last episode I mentioned that changes to forward earnings estimates would be a key metric to watch as companies started to report their third quarter profit numbers. Unfortunately, those earnings estimates for the next 2 quarters are starting to take a turn for the worse, as companies are being a bit cautious in their forward outlooks. This is likely a result of a combination of continued price pressures and higher interest rates squeezing margins, as well as concerns over geopolitical impacts and the potential for a slowing consumer as excess savings and borrowing capacity get tapped out. Now, bulls are still hoping for a late fourth quarter rally, which has some precedent, given that November and December are 2 of the strongest months of the year for stocks, on average. There are always exceptions, however, and conservative investors should tread lightly for the time being. For this week's featured insight, never stop learning. Well, it may seem obvious to talk about the idea that you should never stop learning when it comes to investing. This is obviously true when it comes to most everything in the world. Nevertheless, it is important to remember sometimes it can get easy to get set in one's ways and become a little too comfortable with one's approach to making investment decisions. It's this type of complacency that usually precedes the market throwing you a bit of a curveball. Markets are always changing and evolving, and as soon as you think you have the game figured out, it changes. Sure, there are some principles that do stand the test of time, and they should never be forgotten. But don't let that stop you from reading everything you can get your hands on. Find different perspectives and constantly be challenging your assumptions. This is part of what makes investing fun. If you don't love to learn, you'll probably not enjoy it, and it's even less likely you'll be very good at it. Looking ahead, Fed on deck. Yes, the next Fed meeting is upon us yet again, and in all likelihood, there will be no change in their policy Fed funds rate, which currently sits in a range of 5.25% to 5.5%. Investors will, however, be keying on the Fed's expectation for further rate increases, or possibly cuts, looking out into next year. We expect the Fed is likely done hiking rates for this cycle. We would also caution that longer-term rates may still rise, even if the Fed leaves short-term rates alone or possibly at some point cuts them. It's important to remember that the market has a lot of control over interest rates as well, not just the Fed. The Fed could easily cut its short-term rate target next year and see long-term interest rates rise. Few investors are well prepared for that possibility. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.